Thursday, and I'm not wearing the sling today. I'm David Esrati. I'm running for Congress, Ohio 10, which includes all of Montgomery County, Greene County, and parts of Clark County. And because this is my virtual town hall, which I hold every day, Monday through Friday, I encourage anybody that's dialed in and watching to please either say hi in the comments or ask a question. This is called interactivity, and it's what the internet excels at, two-way communication. So if you're watching right now, put a comment in, let me see your name, and I'll acknowledge you. So yesterday, the Fed decided to raise interest rates by 0.75%, and the stock market went up for a bit, and then it tanked today. And I've heard a lot of people grumbling about the cost of things, and we talked about inflation yesterday. But this isn't about inflation here. This is about a segment of the economy being run by an unregulated mob. And for some reason, the people in Congress who depend on getting lots of money from people with lots of money in order to run this country so they can make lots of money, the little people get squeezed out. In America, most of the people, households, don't have $400 to cover an emergency, a car repair, minor medical mishap. They don't have that sitting in the bank. They're scrambling. They're living from paycheck to paycheck. And you know who's not doing that? They used to call them the 1% during the Occupy movement, but let me tell you, Elon Musk does not give a rat's ass about whether your kids have food in the pantry. Neither does Jeff Bezos. All he cares about is he sold it to you. So, they have tons of money. They don't know what to do with it. They couldn't spend it if they had to. I once worked out when Charles Exley was CEO of NCR in Dayton, Ohio, who was getting paid $7.2 million a year to run a company mediocrely. What's that work out to? It's about $4,000 an hour. Now, if you had to spend $4,000 an hour and you could allow it to amass one day a week the whole day, but every other day you had to spend $4,000 every hour, you'd have to hire people to do it for you. Do you understand that? You don't know what to do with that kind of money. There's only so many expensive meals you can buy, big houses you can buy. What are you going to do? Buy CDs? Nobody. Like compact discs, music? Nobody does that anymore. You just have a subscription. There are limits to what anybody should make in money because for paycheck. Don't give me this, it's the American dream and everything. And don't tell me about sports stars deserving their money. Yeah, they have a very short lifespan, a short career. But people who are making billions a year, they can't spend that money. So what do? They put it in the stock market. Now, most Americans don't own stocks directly. Keyword, directly. How do you own stocks? Well, do you buy insurance on your home? You own stock because the insurance company issues stock. They buy and sell stocks. They have a portfolio. Your bank has a portfolio. Your retirement plan has a portfolio. Even if you're a federal employee or a school employee or a state employee or a General Motors employee, your pension is tied up in the market. So what happens there? Well, it's supposed to make money and hold it there, and then you have more money for your retirement. Now, how is that supposed to work? Suppose you and I are two people, and you want to start your lemonade stand, and you don't have any money. So the things you need are lemons, sugar, water, ice, cups, marketing, a sign, a location, right? Location's easy. You find a corner that's easy to pull off and stop and has a lot of traffic. Okay, that doesn't cost you much. You need a table. Okay, $34 at Costco. A chair. You might have one at home. You'll need cups. You can buy a big sleeve of those for about $15. A pitcher, $15 one-time investment. Bags of lemons. I didn't check the price the other day at Costco, but they're there. Bag of ice. I've had to buy some of that for my shoulder. You might be spending $8 to $10. And you go to cut the lemons, you squeeze it, you make it. You have a sign saying lemonade $1. So you might need to get started, we'll call it $100 for your first day. So you have to sell 100 cups to break even. But wait a second, some of those things were fixed costs, like you can use them again, like the pitcher, the table, the cups. If you didn't use them, you still have them. However, the lemons, the sugar, the water, the ice, that stuff, it has a limited shelf life. You're going to have to do that each day. So you need to make enough money to buy new lemons, buy sugar, etc. each day you're in business. Now, if I'm going to give you money to get started, you're going to have to give me $100 plus back, or interest back, or dividends back. Dividends are a return on my investment. And the premise of the stock market is I invest in your company and you return money to me when you make profits in the form of dividends. That's how we used to do it. That's how the stock market was supposed to work. But we changed things up. We deregulated it. We let banks become investors and all kinds of crap, and corporate raiders. And then we allowed things like program trading and day trading and all kinds of other stuff. Now, if I invest in your lemonade stand, do I invest for 20 seconds, 10 seconds? Is that an investment at all, or is that a gamble? That's not an investment. In fact, if I invest in your lemonade stand and tell you I'm going to give you the money today, and when you start going gangbusters and you need to buy more lemons and sugar than you have, and I say no the next day, am I really an investor at all? Have I invested in your business? Have I made a commitment to your business to grow it? Not at all. What I've done is basically held you up for my return on investment. And depending on where you go to get that initial investment, it comes at different rates. Some people, like a mezzanine capital fund, will charge you 20% or 25% for a short-term loan. Banks may or may not loan to you at all because there's no guarantee you're going to sell any lemonade. Friends and family, they might all invest and they give you a little, your dad will give you 20, your mom will give you 20, your aunt will give you 20, etc. But the question is, are they going to keep backing you, keep growing your business? And then what happens when you got to start getting involved with all the official things? Your lemonade stand grows, you have to hire employees, you have to pay for inspections by the health department, all those other things. It gets more complicated, more expensive. So what have we had on the stock market is it's changed from an investment vehicle where people go to put their money to get a return into basically what I call a casino. And the problem is a casino even has rules about who wins and who loses. And there's some mathematical formulas you can use. The stock market has become so volatile that we react in a matter of minutes and a company can lose half of its value. How can a company lose half of its value from one day to the next based on a tweet? What, all that physical infrastructure, the orders on tap, the production lines, the cash in the bank, that doesn't matter? There is no connection between the valuation on Wall Street and the valuation of a business. And that, my friends, is what's driving this economy insane. There is no CEO out there worth $350 million a year, except in their own mind and in the mind of really rich people who are using them as a tool to get them more money, to buy more stock back for the company and raise the price, etc., etc. Real investing should be regulated on Wall Street, where if you don't hold the stock for at least a year, like you've evaluated this company and you're making a commitment to invest in this company, if you don't do that, it should have a transaction tax on it. Every time you sell and buy and sell, you should have to pay a percentage. It can be a small percentage, but that percentage goes to help level out the market. But realistically, nobody should be buying and selling stocks on a daily basis or hourly or minutes or nanoseconds. It has to stop. Valuations on Wall Street need to align with how the business is actually functioning, and CEO pay has to be deferred in some way, that they get their pay when they retire or not on a day-to-day basis. It has to be based on a long-term progress of the company. Stock options would be a great way to do that, or just awards based on performance over your time as CEO. But in general, when you have employees and most of the employees are making $15 an hour and the CEO is making 1,000 times that an hour, you've got a problem. It's called inequity, and it causes a lot of problems in our economy because we end up paying for it in other ways. Supporting people, supporting social welfare nets, healthcare, etc., etc. If a company wants to pay itself, the CEO, more than 20 times what it pays its lowest paid employees, we should have rules about what kind of investments can be made. The CEO can get money based on long-term performance, but based on daily stock price, not going to get it. All the employees deserve something for contributing to that company's success. That's why I'm a big believer in employee stock ownership programs, and I think every large company should have them. I believe that when people own a bit of their company, they do a better job. I believe that it's a group effort to make money in this country, and it always should be. We are seeing the massive destruction of the middle class with our economic policy. And realistically, it's not the fault of the people in DC. It's the fault of the wizards of Wall Street. And somebody has to stand up to them. If you like what I'm saying, if you agree with me, or if you think that at least we need to have somebody in Congress that talks about these things, consider making a donation at electisrati.com/donate. Consider volunteering at electisrati.com/act, ACT. And if you got any questions, I'd love to answer them. I haven't seen any, but you can put them in the comments below, and I will come back and answer them tomorrow, because we'll be back here tomorrow at 4 p.m. doing the same thing. I'm David Esrati. I want to be your congressman. I have a good reason to be your congressman. I'll be your congressman like no one else has ever been your congressman, reporting back to you daily, telling you what I did in Congress today, what they did in Congress today, and how it's going to affect you. That's what a representative does. Thank you so much for watching. I appreciate it, and we'll see you tomorrow. Thank you.